Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today is Monday, December 22nd, 2008. Japan's trade balance faced a second month of deficit in November and the third month out of four, as the seasonally adjusted balance fell to negative 367 billion yen. Exports were down 26.7% compared to a year earlier, which was the worst year-over-year change on record. The export sector is being pressured by collapsing demand for Japanese cars and electronics as consumers in America, Europe, and even China cut back on imports. Exports to the US slid 34% on the year, those to Europe were down 31%, and sales to China were down 25%. The record fall in exports signals that the second largest economy is falling deeper into a recession. Bank of Japan Governor Shirakawa, in a speech today, explained further how the bank will step up efforts to purchase corporate debt and government bonds in order to improve the availability of funds and alleviate the cost of corporate borrowing. Despite the trade data, stocks were up in Japan, which caused the yen to fall as it usually moves inversely to investor sentiment in the region. Equities in Asia gained on Friday's news that the US government would offer assistance to its ailing auto industry and hopefully stall a worsening recession in that country. The dollar-yen pair climbed above the 90 level today, testing 90.50 and establishing a new line of support to watch going forward this week. In Germany, consumer confidence remained at 2.1 despite the financial crisis and its impact on the economy. German consumer propensity to buy was up slightly as consumers react to lower rates of inflation to end 2008. Still, the fact that the index remains stable at its low level is only a small comfort. German import prices continued plummeting in November as energy products continued their descent. On the year, prices were 1.3% lower, the biggest drop in 5 years. Just in August, prices were up 9.3% on the year. The dramatic reduction in oil prices are of course the main reason for such a steep drop, as oil was down 30% on the year and 20% on the month. Excluding crude oil, prices would have been up 3.2% on the year. Lower import costs should help ease the pressure on European companies' profit margins. In a third piece of data from Europe, Eurozone industrial new orders dipped 4.7% in October, following a downwardly revised 5.4% decline in September. Surprisingly, such a poor monthly result was above expectations. Orders on the year, however, were down 15.1%. Transportation orders recorded the largest monthly drop ever of 9.4%, reflecting weakness at European car makers. Orders for machinery and equipment dropped 6.5% as companies cut back on capital investment spending. The euro-dollar rose overnight to test 1.4125, but then fell back down to its global open below 1.40. The euro gave up its gains following the weak Eurozone orders data. Trading is expected to be light this week prior to Christmas, but that means that a fewer amount of players are able to push around prices in volatile action. Stocks in Europe closed in the red, pressured by automakers seeing weaker orders. The increase in risk aversion in Europe carried over into the US session and boosted the fortunes of the Swiss franc. The euro-franc pair fell 200 pips, with short-term support near the 1.5360 level cracked in European trading. The New York session saw the pair slide further until it found support right below 1.52. The pound remained pressured as well, falling against the dollar and yen. Here, the pound-dollar pair slid to 1.4695 in European trading, continuing a downtrend started last Wednesday that has amounted to a 1,000 pip swing. The pound remains pressured on interest rate expectations and a stream of poor news, including weak employment data last week. Tonight, look for GDP data from New Zealand and the leading index from Australia. Japan has a bank holiday, so trading will be light around the Asian session. Overnight, the Eurozone and UK released their current accounts, and the UK will also post its final version of third quarter GDP. Tomorrow, the US has a slew of releases, including its final third quarter GDP, existing and new home sales, a government house price index, the Richmond Fed index, and the final version of the UMich consumer sentiment. And that wraps up this edition of our broadcast. Thank you for joining us here at CMSFX.com, and happy trading.